multiple ways to use the orb to put you in position to be successful. So once again, good morning, ladies and gentlemen. Welcome. Let's get to it. All right. Let's get to it. All right. So remember, ladies and gentlemen, please be patient with yourself. The market takes time to be able to master. It's not simple. It's not an easy fix. So let's get to it. So first thing first, I want to talk about is on how we was able to master Lily swings from Thursday into Friday. It was based off the catalyst. And then we can read that catalyst and we can break down the setup that I used to be able to take full advantage of. We was able to get 3,200% on that. As you guys can see, this is 1,400% on the flyer. So it was 3,200% trade. Contracts went from like $28 to almost $1,000 a contract. So that's something that you have to think about as you move forward as traders. That's what we like to call a marlin. That's what we like to call a tuna. If you guys are fishing in fresh salt water out in the middle of the ocean, it takes time. You have to be able to wheel it in. You need different equipment. So let's get to it. So first thing first, just looking at the market when you guys are trading, we understand fundamentals and we understand technical analysis, but we have to assess things that make sense. We need a catalyst. So in this instant, we had a catalyst, key factors. So they was looking at Medicare, GLP, starts July 1st. And we had Eli Lilly stock star soaring today because they was able to get approved for things that make sense, right? So just weight loss drugs is being bundled together. So it's pretty cheap, it's affordable. So that was a positive vibe leading into Thursday. But now we do trade the orb. I do trade 9-hour orb. So it's something that can put you in position to be successful. But just looking at the 9-hour orb, it's called ORB, open range breakout. So with the 9-hour orb, you only have 2 candlesticks, right? You only have 2 candlesticks within a day. You have the 4 a.m. and you have the 1 p.m. candle. I'm always looking to take the trades above the 1 p.m. candle, so this is pretty simple. So this was Thursday. We had 1 p.m. So what we want to do as traders, we want to be able to mark the high. So to have that candle was 1,136.87. So I'm looking to take that trade. Now, I'm looking at previous 4 a.m. I'm looking at previous 1 o'clock candles. So I'm looking at my target. So next target would be the previous 4 a.m. candle. And then I'm looking to the left. My previous target would be 1 o'clock candle on Thursday at 11. And then my next target would be previous 4 a.m. candle. This will be on the 8th. So I pretty much have multiple targets that I want to be able to reach on a 9-hour orb. So it's pretty simple. So we have 1,045, right? So that's our channel to let us know, hey, the bulls are coming in, they're pushing into the upside. My next target is 1,170. It lets me know that the bulls are in complete control. My next target is 1,088. And then my ultimate target was 1,200. So that was a strike price that we was able to took. And then boom, we opened up on Friday. We completely pushed to the moon. So pretty much we came out, we eclipsed all of those targets to the upside, went all the way up, and we touched 1,215 and 76. So that was pretty much a slam dunk on that trade. So pretty simple. We'll take you guys back. 9-hour orb. We're looking to take it above the 1 a.m. candle. We're marking our highs, we're marking our lows. And then before the market actually closed on Thursday, we had an opportunity to be able to look at the market. So the market closed. And here we go. This is Thursday, 9:45. We got 10:45. We came to the downside, 145. We came back above. We did a little bit of consolidation, and then boom, we opened up. We completely took off to the upside. So that was just simplicity, a simple way of trading the market. Now, if a lot of people actually miss that trade, a lot of people be like, oh, you know, it's easy to catch and things like that. Yes, it is. All you have to do is rinse and repeat. So as we open up Friday and Thursday, we completely open up. The trade is already wild, it's blazing. Now, let's say you missed the opportunity to be able to trade it. We could do something a little bit different. But now, we need multiple things to line up for us to be able to trade the orb and feel real comfortable. So I put together something for you guys so you guys can understand what's going on. Now, I do trade Elliott wave. You guys can clearly see that we had an Elliott wave at 1,200, 1,221 and 22 cents. We hit that Elliott wave. So if we do get some form of rejection, the bears start coming in on Eli Lilly. We got multiple targets coming back down. These are our previous points going to the upside, but our Elliott wave takes us all the way back down to 1,079, 1,035, and then all the way back to 991. Now, people get asked this question all the time. I do have an indicator. It is on TradingView. It's called Bull by Empowerment, so you guys can actually utilize that. Put yourself in position to be successful as you move forward utilizing that. So You guys can search bull flow scanner, and I'm going to break it down so you guys can utilize that and being able to use it as you move forward. So remember, you can lock in on it, you can take full advantage of it, you can go from there. So let's get to it. So pretty simple. So if you're using a bull flow scanner, we got a bull flow score 9 out of 10. So let me know we 90%. And as we 90% bullish, we understand that the bulls are in complete control. Now, we didn't have any surge because towards the end of the day, it plateaued. That means we did a little bit of consolidation after we hit high. So that was pretty unique. That was pretty serious. And then we did have RSI 76.50, and then we had the MACD was bullish. The trend was bullish. The VWAP was bullish. So everything was above, and it gave us our clue. So that's why we was able to hit the 3,200% based off the 9-hour orb. So once again, 1 o'clock a.m. candle on Thursday, we broke above first target, second target from previous day, third target, and we completely went mayhem. So $1,200 calls, paid 3,200%. It was pretty simple. We was able to put ourselves in position to be successful, right? Contracts was $2,800. They went to $1,000 a contract. All you have to do is take full advantage of the trade ideas. Contracts are $28. I'm pretty sure you didn't put $200, $300, $400 on SPY, $1,000 on SPX. So this was just one of those trades. You have to just take it, take full advantage of it. So using a 9-hour orb. Now, I get this question. I'm new to the 9-hour orb. Okay, so let's say you missed it the previous day. Now, we can go back. We can backtrack. We can use the 15-minute orb, right? Pre-market orb. So this is pretty simple as well. So what you want to do, you want to line it up in the morning. All you want to do is mark the high of the 15 pre-minute orb, 5-minute time frame. Once we came out from the bill, you could have took this trade once again, right? So you have to be fast, quick on your feet. You still had an opportunity. Boom, it pushed up, right? So it's opportunity now. Let's rewind that. 15-minute orb, 9:15 a.m. Mark the high, mark the low. If you bearish, bullish, you can do both. Now, once I mark the high, I understand that I already had a target to the left, right? So we understand that it's pretty much the same target of the 9-hour orb. So now we want to continue to keep on accelerate. Market 5-minute time frame completely came out from the bill. That was a pretty decent target you were able to trade. When contracts exploded, you had an opportunity to take profit off the table if you choose to. That's you. That's a personal preference. I don't understand why people want to sit around and, hey, you know, I want to make all the money. There's no such thing, right? So just looking at this, we did base. We did a little consolidation, a lot of consolidation, and boom. Once we came out, ladies and gentlemen, it was pretty much a straight shot to the upside. So that's why we was able to hit 3,200% on these trades. So that was pretty simple. 3,200% on these trades. Able to bank 1,400%, but the trades went 3,200%. Now, everybody say, oh, I see it, I see it, I see it. Now, we can look at the weekly. We had another opportunity to be at a trade just based off of the strat world. We had a 2-3, 2 bearish reversal. Then we had a 2-3 bullish push to the upside. Now, you guys are looking at the market a little bit different. As you guys get a little bit more seasoned, you guys can actually home in on things that works, right? You don't have to switch back and forth between multiple things. Now, I'm going to highlight this space. And I want you guys to see what I'm talking about. Downtrend reversal. We have failed to continue the trend. We got a 2-2 bearish reversal to the downside. Now we got a downtrend reversal. So once again, these same targets keep popping up no matter what time frame we on. They keep popping up. They keep popping up. So you guys can see 1,147 was our entry. We automatically know our target is the top of the fail to up. 1,186. So we took the $1,200 calls, and then bingo, we completely pushed to the upside. If you know anything about a bullish 3, we take out the low, and then we take out the high, and then we accelerate to the upside. Now we're looking for a 2-2 continuation. So now we can knock it down on a 3-day time frame. You can clearly see that we got a downtrend reversal. We went from resistance to support back to resistance. So what do I mean by that? We got some resistance here. We got some support here, and we went back to resistance. So pretty much we have layers. In the market, we have layers. And the layers in the market, we just want to take full advantage of those layers, right? We don't want to second guess. If the setup is there, we like the setup, and we've been waiting on this setup. We want to take the trade. We have to put the money on the line. Now, daily time frame, same thing, same rules, same principle applied. We got some form of resistance here, and then we got some form of support, and then back to resistance. So the layers are there. All you have to do is execute, ladies and gentlemen, buy the contracts. The contracts pretty much be cheap. I try not to get people into expensive contracts because I know it weighs on them to be able to have a lot of money on the line. So I try to make sure that we get into plays that make sense for us. So cheaper contracts. And just looking at the market is looking at Elliott waves. If we do get some form of rejection, we got 3 targets to come back to the downside. So that was Eli Lilly. Any questions on Eli Lilly? Ladies and gentlemen, any questions on Eli Lilly? All right. So one other thing that I want to show on Eli Lilly, you can use a 6-hour orb as well. Just looking at the market on a 6-hour orb, you can actually use a 6-hour orb. But the 9-hour orb work for me. I want less candles as possible so I can be able to take full advantage, especially if I'm swinging. I want less candles possible on a larger time frame. So let's look at the 6-hour orb. So this is Thursday. We got the 10 o'clock orb. We came here. We had a 2-1, and we also had the 4 a.m. orb. So just looking at the market, we also had the 4 a.m. We had the 10 o'clock on Wednesday, and then on Wednesday we had the 16. So pretty much we were just trading inside of a range. So pretty much too many candlesticks for me. See how we trade inside a range? Is too many candlesticks, so we don't know which way I really want to move. So the 9-hour orb gave me a better opportunity to be able to trade. And once we broke outside of this range, everything could pretty went to the upside. So that was pretty dynamite on that one. All right. So the next one, SNDK. So this was pretty much a 2,000% trade on SNDK using a 90-minute orb. Gave this trade out. This was just a fire trade. I think a lot of people fail to realize what's at stake. So just looking at this was pretty simple. This is the 4. We came out. This is 4 a.m. Just looking at the market, this is 1 a.m. Just looking at everything, and we pretty much exploded to the upside. Now, I did get this trade deal out a day or two ahead, and we completely went parabolic, right? So just looking at the market, this is Wednesday. This is the 4 a.m. candle. We pretty much came above here, and we completely went to the moon, right? So pretty much went all the way up to 2380. So this was just a monster move. But just looking at the market on where the market works, ladies and gentlemen, you can pretty much backtrack and see where the market really want to go. So we had an inside candle at 1 o'clock. This is an inside candle on Tuesday at 1 o'clock. We came above 2017, and we automatically know our target was what? 2152. But me, in my mind, I understand that a lot of people are going to pile into these contracts because a lot of people doesn't have $2,000, $3,000, $4,000 to afford out the money contract. So I'm looking at resistance from the previous days, and the resistance was 2353. And if you guys look at it on a weekly time frame, you guys can clearly see that we was going into a complete uptrend. So I say, what makes more sense, right? What makes more sense in the market is to be able to trade $400 and $500 out of the money because we have an ATR of 200. So we can double that if MU was able to be earnest, and then pretty much we accelerated from 2,000 all the way to 2,356. So we pretty much got a $300 plus move to the upside. We knocked out resistance, and then we did some form of rejection. Now, I get this question. What if I missed the play, right? 9-hour time frame, we got it. Inside 3, double outside. We had a bearish outside and a bullish outside. Took out the low, took out the high, and we accelerated. Now, in order for you to be able to trade this back to the downside, I try to explain to people, you have to look at it on a smaller micro time frame. So a 90-minute time frame. So on Thursday, when the market closed, we had a rejection. We got a shooter, which is an actionable signal. But before that, we had a hammer, which was an actionable signal. So we got a 2-2 bearish reversal. So the 90-minute orb, we understand at 8:30 in the morning, if we really want to trade this, we have to pay close attention. So 8:30 in the morning, we pretty much had a hammer. So this is pretty much a fake out because we trade inside of a range. This is pretty much a fake out. We trade inside of a range. All right, so inside of a range, we had an opportunity to make some money. So let's look at this. Any questions on SNDK before we break down this 90-minute time frame? Any questions, ladies and gentlemen? Any questions? All right, so let's get it. So 90-minute time frame, we're trading inside of a range. You guys can clearly see. We got 4 a.m., right? We got pretty much, we got 5:30, we got 7, we got 8:30. Pretty simple. Last 90-minute time frame at 8:30, we just want to mark our what? Our lows, and we want to mark our highs. But you can clearly see that we came below 21.28, and we completely dropped all the way down to 2,063. So that was pretty much a decent move. But now a lot of people say, oh, I want to catch more of it. Sometimes you're not able to catch more of the move. You just got to catch what you can catch. So we can use the 15-minute orb. When the market open, we can take full advantage of it. All right, so here we go. This is Friday. Just looking at the market for what it is, the market open here. We got 8:15, we got 8:30. We got 9:30, we got 9:15. We mark our low and our high. Pretty much we had an opportunity to be able to trade it to the upside. We had an opportunity to trade it to the downside, but the downside paid a little bit more. Once we broke 2161, you can put it on a 5-minute time frame. Once we broke 2161, that was here. We had an opportunity to be able to trade this. We completely closed here. Once we completely closed it at 2160, we completely dropped all the way to the downside. We dropped 100 points. So that was pretty simple for you to be able to trade the 15-minute orb on SNDK. So that was pretty simple. You guys can actually use it, put it into motion, and take full advantage of that. Now, looking at the market on SNDK on a weekly time frame, I saw something, and I say, you know what? It seems like we always go 2-2 continuation, and then we pretty much get hit with a bearish 3. So we pretty much 2-2 continuation. We got an opportunity to be able to consolidate. 2-2 continuation, bearish 3. 2-2 continuation, bearish 3. So pretty much I'm looking for SNDK to come all the way back down to 1840. If we can come back down to 1840, that is wreak havoc on the market. And I'm gonna show you guys why I say that and how we can actually take full advantage of Elliott waves coming back down. All right, so looking at SNDK, 2-2 continuation, bearish 3, 2-2 continuation, bearish 3. So I'm looking at an opportunity. Once we start coming down here and flushing below the bearish 3, we have an opportunity to continue to trend to the downside. Pretty much looking at Elliott waves, we can come all the way back down to 1652, 1435, and also back to 1218. So based off the Fibonacci retracement, we have an opportunity for this to continue to keep on selling to the downside. In order for us to get there, right? The daily time frame, we got to continue to keep on moving. If we go 2 down from Friday, ladies and gentlemen, all hell can break loose in the market. So we got to be prepared for that. We know what's happening in the Middle East again. Wars breaking out. So this can actually affect every part of the market, tech, industrial. This can affect everything. So we completely looking at an opportunity for us to flush another 160, 150 points. And if we breach 1855, ladies and gentlemen, we got another opportunity to come back down to resistance. That'll put us around 15. So we pretty much from here, we could drop 500 points in a blink of an eye. You just got to be prepared for that. All right. So I get this question all the time. How you trade Qs? It's simple. I trade Qs multiple ways. You guys can clearly see Friday was just a beautiful day on Qs. I'm not even going in too heavy. 25 contracts, 25 contracts, 25 contracts. Usually I go 50, 100, 200. 300 max on QQQ contracts, depends on the price. If I can get the contract for 10, 15, 20, 30, 40 dollars, we get the 300 contract. But when they're a little bit more expensive, I want to take less contract. Now, I get this question all the time. Do you trade a 9-hour orb on QQQ? Yes, I do. But I like to scalp QQQ. I like to look at it on a 90-minute time frame. I like to look at it on a 15-minute time frame. I'm going to show you guys how to actually be able to be technically sound, right? So just looking at patterns, I think the strat took people away from looking at patterns and what candlestick really mean. Candlesticks is data, is information, right? Information only moves when you have solid fundamentals and you have news, right? We always looking for a catalyst to move ETF. We always looking for a catalyst to move individual stocks. So just looking at QQQ, you can understand that we have a cup and handle on a 9-hour time frame. It's pretty simple. I know it's boring, but a lot of people fail to realize to execute this. If you guys can clearly see that we have a triple top, right? Follow me. Let me know if you guys understand it. Do we have a triple top? Yes or no, Travis? Triple top. Let me know what you guys see. All right. All right. So we have a triple top, right? So in the midst of looking at this triple top, we understand that we want to be able to identify with this. So we got resistance, right? So we got resistance, right? So we understand that resistance is a wall. We having a hard time breaking this level of resistance. So as a trader, I understand that these are where the stop losses is at, right? I understand they're hunting liquidity. So if they're hunting liquidity, right, this is a higher time frame. So if I understand they're hunting liquidity, every time we get some form of what? A rejection. As we get a form of rejection, we have to pay close attention to what's going on. And what's going on here is we hitting rejection. We coming down, we're bouncing off support, we're pushing back up. In this instance, you want to understand what is resistance, right? What is our resistance number? Our resistance number is 747, right? So we understand the market topped out at 748.65. Our resistance is 747.80. So we understand as we get closer to this target, we always reject. So once again, we reject, boom. We come down, we found some support, Now, I want you guys to understand support can turn into resistance, right? So as we came to the downside, we bounced off the lows. All right, we came back here. This is resistance. We broke through this resistance. We came up here and hit resistance. We came down. We fell through resistance. We pushed back up. And once we came back through previous level resistance, we understand that this stock was falling to the wayside. So now, what happened over the last couple of days? It's pretty simple. You guys can clearly see that we're trading inside of a range. We got a 3, 3, 2, 1, 2, 1. We're currently inside on a 9-hour time frame. So there's no big movement. So what we have to do as traders and also as investors, we have to be able to switch it to smaller time frames so we can get the moves, right? I understand that people don't want to trade on a smaller time frame, but if you really want the money and you're really a trader, you have to be willing to adapt. And if you're not willing to adapt in this market, you're not going to make any money. I don't care what your setup is, because your setup, no matter if you're trading on a daily, the weekly, the monthly, the 5-minute, the 5-second, the setup is still the same. It's just a faster candlestick that's open and closing. All right, so here we go. So 90-minute time frame. This is pretty simple. This is 7 a.m. This is 8:30, right? So we understand we didn't come above 8:30 at all, right? But we did do some form of Fibonacci retracement. So if you guys are your fib level, we did come back above the 50%. We did come back above the golden zone. Now, in order for you to be profitable, you have to understand how Fibonacci retracement works. So we came up here, pretty much a lot of wicks. I like to call this wick graveyard. So they really didn't want to make moves to the upside. They really didn't want to make moves to the downside. So I'll just call this whacking contracts, right? So they pretty much was whacking contracts, and a lot of people got caught inside the mist. So just looking at this market and understand what's going on, we got a rejection. Y'all follow me? Thursday, we got a rejection. Thursday, we got a rejection. We came down Friday. Now, this is where it gets interesting. Friday morning, pre-market, we came all the way down here and we found a base. All right, what can I say about this? All right, this is our hard support. So I want to get rid of the fibs, and I want to be able to switch my time frame because I understand what's going on, right? They're trading back and forth. They're trading back and forth. So it's too much consolidation, right? So if it's too much consolidation, 15-minute time frame is going to work like charm for us. Let's get it. So just looking at the market, Friday, we understand the 15-minute orb, it works like a charm, right? So what I want to do is I want to look and see how they are maneuvering, right? This is how they maneuver. All right. So pre-market, we understand that Thursday, we got a high. This is pre-market on Friday. So we understand this is our pre-market highs, right? So we understand we want to mark our pre-market highs, right? We understand pre-market highs is a key level of resistance. Pre-market highs is a predetermined level based off of the institutions. If we break this level, we can make some money. We get a lot of volume. Pre-market lows, we understand that's support. If we break this level, we flush. But if you notice anything, what did they do Friday? They played switch and bait. So basically what they did is they say, you know what? We're going to give a little so we can take a lot. So they gave you guys a little and they took a lot because a lot of people, once we bounce off these levels, a lot of people was, they was curious. So here we go. 9:15, we're going to change this color, this candlestick to blue. 9:15, we broke above 707.47, right? Boom. We can get into calls. We automatically know our pre-market high was 712. So that will be our strike price to the what? Upside. So that's our strike price to the upside. All right. So if that is our strike price to the upside, right? So let's go. Let's get acquainted. I think a lot of people are afraid of the market. All right. So let's get acquainted. All right. So if that's our level to the upside, so we understand that's our strike price for the day. So we are trading 0 DTEs. If we are trading 0 DTEs, that's our level. So pretty much we broke above 715, 707. We got multiple targets as we continue to keep on rallying, but our ultimate target is pre-market high. So let's get it. So boom, 715, we broke resistance. First target is 50 cents once you get into a trade. So pretty much if you got in at 707.40, you get out at 707 what? 90 or 707.08. Next target is 709.22. That's resistance, right? And then we understand that our next target is percentage based, and our last target will be pre-market high. If we continue to keep on pushing for now, you can stay into a trade. But you guys notice something. We went above, we reject pre-market highs. We came all the way back down, right, to our second exit, and then we pushed all the way back up. Now, in order for you to be profitable and be able to take trades, you got to understand candles. So we went up here and we reject a little bit of consolidation. Now, what I like to do as a trader and as a scalper, if we come back down and we break pre-market highs and then we accelerate to the downside, I like to take my put entries coming back down to the previous levels that was our interest to exit on our call side. So you guys notice we came down, we broke. We're gonna put it on a 5-minute time frame so you guys can see it. So we pretty much knocked through all levels. All right, we hit resistance, right? So as we hit these resistance, we came down, we broke our what? Pre-market highs. This is our opportunity to get into what? Put. So we completely broke 5-minute time frame. We came down, we swept our targets on call side, first exit. We came back up and we kissed pre-market highs, right? We kissed it. So once again, this is my opportunity to trade a contract again. Once we got into this contract again, first exit. Once we came down to pre-market 15-minute orb, this is my second exit. And we came down, we had some form of what? Some form of what? What we have, ladies and gentlemen? Some form of what? Support. So if we hit this support, we understand this is our final what? Exit. That's pretty simple how you trade the market. You got it? Simplicity. Follow me? This is a simple way of executing in the market. Now, let's say you just want to trade 5-minute time frame. You can really scalp this back and forth, but my whole thing is you have to have a skill set to do that. Make sense? Now, if I was trading a 30-minute orb, right? I get this question all the time as well. If I'm trading a 30-minute orb, I'm trading pre-market. So I understand that 9 o'clock is my last what? What is 9 o'clock? Is my last what? Pre-market what? 30-minute orb. So once I come above 707.26, it's pretty much the same price from previous, right? Orb, here we go. Boom, we came straight out the gate, pushed all the way up, knocked out some levels. That's all I need. And we understand if the market comes back down below my 30-minute, my 15, my 5, my pre-market orb, I understand that the market is changing. It's going from being bullish to being what? Bearish. Simplicity. Any questions on that? So I looked at Q and I said, you know, it's pretty simple, right? How can we trade Q, right? How can we execute Q? So this is how you do it. So pretty much me giving you guys these examples, I was able to actually be able to get in these trades and maximize these trades. You guys see the puts. All right. So being able to trade this, so the 700 puts, I want you guys to understand, why do you guys think I took the 700 puts for the 29th? Why you guys think that was important? Why do you guys think that was important? Why you guys, ladies and gentlemen, why do you think the 700 puts was very important? All right. It's multiple reasons. Why do you guys?
You're heading back down to support.
Head back down to support, right? And then guess what? In order to protect your capital, you have to buy extra what? Time. And then I want you guys to pay close attention to this. If we're heading back down to support, right? Y'all follow me? Y'all listening? What is the lowest level of support from this morning? 7 what? 0281. So if we do get a rejection from the top, we automatically know we can come back down to 702, and these contracts will pretty much be in the what?
In the money.
Got that? Got that? Easy. So I just want people to pay close attention. So this is even not the full move, but can you imagine rejection? You get into the contracts, you came down, you pretty much take what? 25 contracts, you could pretty much make 300%, right? On 1-day contracts, 2-day, 3-day contracts, and you can make money. Got it? Got it?
Yep.
So this is why I say teamwork makes the dream work, because we're looking at the market from a lens. Now, I get this question again. What if I don't have the money to afford 25 contracts? That's cool. Now, because I think a lot of people, they get it misconstrued. You don't have to do 25 contracts. You can do 1 contract. Everybody bankroll and everybody capital is different. But what you want to do is you want to seek and destroy, right? So you want to be able to use this information to seek and destroy. So once again, I get this question. If you just traded calls, no, we traded what? Calls and what? What did we trade? Calls and what? What did I just go over with the strategy? We had an opportunity to trade calls and what?
Puts.
And puts. So here we go. This is the calls. All right. Once again, it's no set boundaries on when to take profit, right? Get this question again. What else can we trade? Like, it's simple if you guys just use the system and keep hunting. Here we go. Once again, we was able to trade what? Calls, because we are scalping. Remember, ladies and gentlemen, we're getting into these trades. We're looking to be profitable. So we in, we out, and we allow it to actually what? Materialize. Make sense? All right. Now, I get this question again. We was on the live. I said, hey, we could trade Riot. Riot can work for us. So simplicity, trading Riot to me is therapeutic, right? Because if you guys see Riot, you guys know Riot runs with Bitcoin and things like that. But just looking at Riot doesn't look too what? Look too pleasing, right? And people are like, oh, I don't like how it's looking. Yeah, all right. So let's look at Riot for what it is, right? 9-hour time frame on Riot, right? This is Thursday. This is what I want you guys to see. Thursday, 1 o'clock, 27.85. I automatically knew we were taking a $28 what? Calls, because if you pay close attention, we're gonna this is our 1 a.m. All right, we already know our target is the 4 a.m. candle, right? And that'll put us at 28.50, and then our next target will put us at 29. All we have to do is switch it to the 15-minute time frame. All we got to switch it to is the 5-minute time frame, and we can see this thing actually what? Making noise. Y'all see what's going on? Simplicity. It's easy way to what? Trade the market. Here we go. Y'all pay close attention. So we understand this is our entry, 786, $28 contracts, 28.90. We bounce below, we push back up, second entry, 28.77. Make sense? We had multiple opportunities to be able to trade Riot, right? So Riot is just one of those things, especially off the 15-minute. We can actually trade the pre-market orb. We pretty much came above 27.18 and we exploded to the upside. We hit 28.90. So this was pretty much an easy trade. But just looking at Riot on a weekly time frame, we've been going up for a while now. So pretty much, if you guys look on a weekly time frame, can you guys tell me what do you see on a weekly time frame that makes sense to you as a trader, and what you don't see that I can explain to you guys? What do you guys see? Talk to me. Let's get it. Let's get it. I noticed things right off the rip. I understand my Elliott waves is giving me targets, right? I understand that. That's cool. I get it. But what I want to notice is, what do you guys see as structure, right? What do you guys see as structure, right? So just looking at structure, I understand this is what? Resistance. I understand that we got a triple bottom. This is support. So I understand once we bounce and we go up, first target, second target. Once we continue to keep on rallying, y'all see these targets? We just knocking them all out as we come to the what? Upside. Simplicity. Sometimes you have to be in trades a little bit longer to be able to be profitable or be beneficial to you. Sometimes you're in a trade for a short period of time. All right. So this is simplicity. All right. Gave out Netflix. This is pretty simple. Looking at the weekly time frame. I know a lot of people said we got an inverse cup and handle. I told OG, please pay close attention to inverse cup and handles. So we pretty much, we got an inverse cup and handle. We're coming down, right? So we inverse instead of a cup and handle right here going up. We're coming down. So we in bearish territory. But now, just looking at Netflix, quality company, fundamentals is pretty good. It's pretty sound. I think they're getting a little bit expensive, but people enjoy it, right? So we bounced off of $70.86, which we understand this is a quality company. It's going to do that. 9-hour time frame. And this is something that I see. We got a little bit of consolidation. We got a 2. This is the 1 o'clock on Thursday, so automatically no. 72.32. Once we broke that, I told you guys we're taking the 72, 73, $74 contracts, and then boom, we pretty much rallied on Friday. Make sense? So once again, if you guys missed it off, let's go back. If you guys missed it off the 9-hour time frame, you guys had an opportunity to trade it off the 30-minute, but I'm gonna show you guys how you can trade it off the 15-minute orb, right? So here we go. 9:15. Here we go. We're gonna mark our levels. 5-minute time frame. We came above, complete push to the upside. Boom. We knocked out all targets coming to the what? Upside. Do y'all think that was a difficult trade, or you guys think that was simplicity, or you guys think that you guys were just sitting on the sideline? What do you guys think that happened in this instant? Because this was pretty much a simple move to make to the upside. What do you guys think? Talk to me.
But you describe it, it's a simple move. I'm looking at for me, I'm looking at things like from a little bit higher time frame. So like if you go back to, I don't know if it was on the daily where we got like 5, 6, or is the daily, or I'm pretty sure it was like 5 or 6 like candles to the downside. So I'm trying to like look at that and try to figure out like, okay, because I can't look at the screens all day. So looking at it from a daily perspective, I'm trying to think like, okay, what's going to happen from that? Because it looks like it's a little bit below a level where it would have hit support, but on a lower time frame, it actually is picking up some support and going back to the upside. But if it was a contract that you're looking at for try to get into, not long term, but say like for like a week time frame, what's your thoughts on that? That's where I get conflicted sometimes, is just looking at, say, like maybe, a lower time frame versus a higher time frame of a daily, and trying to develop a little bit more of a swing trading kind of mindset.
Okay. Yeah, I like that. That's a good approach. So let's say on Netflix, right? So that's because I know that you don't have a lot of time. You work, right? A lot of people are really busy. So let's say you really want to get into Netflix, right? And you looking on a weekly time frame, right? It looks very what? It looks bad, right?
Yeah, it
right?
does.
But my thing is, in your mind, you got to hit that switch. Okay, it looks bad, right? It's that 52-week low, right? It's a quality company, quality fundamentals, right?
Yep.
All right. So in your mind, you're saying what happens when quality companies hit below the 200-day, hit below the 50-day? What happens, right? You get a what? A push and what? Share buying, right? A lot of companies like to come in and buy it, push it back up. But if you notice on a weekly, we got an actionable what? Signal, which is a what? A hammer.
Yeah, you got a hammer.
You automatically understand if we come above this hammer, we know that we're going to continue to keep on pushing. So 77.17. So in your mind, let's count the weeks. You ready? How many weeks did it took to come down? Count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So you pretty much know that we took almost 3 months to come down. So if you were swinging contract, you need to do quarterly what? Quarterly contracts going back what?
Back up.
Back up. So now you got all of your targets going back up. You can put it on a monthly time frame and you can look at all your targets. Here you go. 87, 43, 95, 46, and 109. This is really giving you the blueprint to be able to trade it. Now, once you're trading these quarterly contracts, so you should be trading to September, or you can trade December contracts. You can do 6-month contracts. Make sense?
Yeah.
So now, in order for you to get in these contracts, you got to drop it down to a smaller what?
Smaller
time frame. And you say, you know what? I like this entry, and I'm gonna deal with it. So boom, this is our entry. Boom, we got in the entry. Now we bounced off the lows of 70. We went up to 75. You already got a $5 move, and you got quarterly what?
Quarterly contract.
There you go.
Bet.
So it's just you can take those profit off the table, but in your mind, you know this is a quality company, so you want to stay in those with some form of runner, so you can actually see it play out. Make sense?
Yeah. I appreciate that breakdown.
All right. So now throw any other stocks out there. All right. I got some stocks, right? So I know a lot of people saying this, and that. So let's look at VBAI. Quality company, right? Right. But tremendous what? Rejection. All right. Y'all see them broad formations? We reject, right? It's been getting rejected for a while, right? We went from 190 in September of last year all the way down to $90. That's a $100 pop, right? But if you put it on a quarterly time frame, we've been here before. All right, I'm gonna get rid of all this. All right, so you see how we went up here? This is back in 2000. We came all the way down. We found $53, and then we went all the way back up to what? 191. Now, quarterly time frame, we do have a nasty rejection, right? Y'all see it? Nasty rejection. We failed to continue this trend, right? And we got a 2-2 bearish reversal, 2-2 continuation. So we did reject 191. We already down $100. So if you liked it at 191, you should be in love with it at 90 what? 94. So just looking at this gives you an opportunity that we are falling. That's okay. Quality companies is gonna fall, right? That's just part of the game. But once I start drawing my levels and start coming to realization is we're coming back to the same levels we was previously what? Previously at. Simplicity. So pretty much just looking at this, we understand that what's happening in the market. So we failed to continue the trend. We didn't break resistance. We reject the resistance. We came down. Now, the key ingredient now is we did find some resistance here in April of 2025, support, at 95. And then we pushed all the way up to what? 144. And then pretty much we came back down
and then we pushed all the way back up to 189. So now we want to see if Baba is going to have enough strength, enough force, right? Weekly time frame, it don't look too good. 2-day time frame, it don't look too good. Daily time frame, it don't look too good. So we understand what's happening now. We need to wait on BABA, which is Alibaba. We want to be able to wait and see if we can scalp it, or we want to wait and see if we can actually break these levels off the weekly time frame. So we got to be patient. Now, owning this company long term will make sense for a lot of investors, especially if you're looking to invest outside of America. This company is not going away as the Amazon of Asia. A lot of things on Amazon comes from Baba. So a lot of people pay close attention to what's going on. But if you just look at the trend, we have an opportunity here, right? If we come down here and we continue to keep on falling, to be able to get into some shares, into some leaps. Make sense? Let me know if that makes sense, ladies and gentlemen. Right now, we are in a free fall, right? If you guys look at on a 6-month time frame, we are in a free fall, right? So we went up here, reject. We went 2 down. So pretty much, ladies and gentlemen, if we continue to keep on falling to the downside, we do come 2 down. I would advise you guys, if you guys know anything about the company, I would buy some long-term investment on this, and I would just let it cook over the next 36 to 6 months, 60 months, right? This is your opportunity, right? Because you missed it here at 51, you missed it here at 64, and then we did go back up. So pretty much just looking at it on a 12-month time frame, you can pretty much understand where we stand. We pretty much got a lot of consolidation. We consolidating inside this mother bar here, right? We pretty much, once we come up, I think, to me personally, we might hit 200 over the next 6 to 5 years. It depends on what going on with the laws inside China and things like that. But this is a quality company. Jack Ma, I like him. My thing is, I still think that he have room to grow. All right, so let's get to it. I get these questions all the time. What are you looking at next week, right? So pretty much just looking at the war, what's going on, exchanging blows with Iran. It's pretty vague, ladies and gentlemen. I want you guys to be able to look at the market. So we did just have IWM hit 300, right? I want you guys to understand how major this is on a 6-month time frame. IWM pretty much back in the pandemic, IWM was $87. I want you guys to give a clap for that. $87 for small caps, ladies and gentlemen. $87. You guys can see the momentum. So when people tell you should just trade, you should run. Because sometimes you got to understand that long term what? Pays. That's 236% off of just long-term IWM on small caps, right? So that's a tremendous move. That's 6 years in the making, it right? If you're living, 6 years went by. I mean, life is ups and downs, but I want you guys to pay close attention. 3-month time frame on IWM, we failed here in 2000, and it was like, whoa, the pandemic, right? But before that, we had a 158 ceiling, right? Once we came outside of that ceiling, it happened again. We pushed up, we fell, so we traded inside multiple ranges, right? But we created a lower high, multiple ranges, right? We did it again. We reject, we came down, we traded inside this range again, and we tried to create this. Now, what I'm looking forward to as we continue to keep on moving is a rejection. And what do I mean about a rejection? Is overbought, right? So the market is overbought. When things happen in the Middle East, we can actually see the market will actually have probably a major push down over the weekend, leading to Monday. Now, we already have our targets, right? Now, if we're trading in consistent ranges, right, we understand what's happening. We carry resistance, we came down. So if we do reject 292, it'll be our target. 288 will be our target, but ultimately we come back down to 276. And then we also come back down to what? 269. So we got all of our targets coming back down on IWM. If you look at it on a daily time frame, you can clearly see rejection. If we come down, we go 2 down. And as we come 2 down, we continue to keep on rallying to the downside. So that's what we're looking forward to. Everything is overbought. IWM small caps is going to take a big hit when everything started actually falling. So this is your opportunity to take full advantage of that. Any questions on IWM? Any questions? All right. So it's about just taking full advantage of what's going on. I think a lot of people are afraid of the market, but my thing is don't be afraid, right? Just attack it. Always attack the market, right? Attack the market with your technicals and your skill set. So let's get to it. We got some trade ideas leading into next week, right? So we understand that we was able to hit AVGO. This was a while back. We was able to hit it. On the third, we went up to 495. We got a major rejection. We all the way back down to 365. So 100-point drop plus. Now, one thing I did notice off the weekly time frame is we are going full-blown throttle to the downside. So this is how you can take advantage of these type of tickers. We reject runners, boom. Now we are coming down. So people ask these questions all the time. How can I take full advantage of it? It's simple. If you look at your setup on the daily, you look at your setup, you can take full what? Advantage. So now how can I take advantage of this? Anybody? How can you take advantage of this? Talk to me. How can you take advantage of this? Just looking at the setup, how can you take advantage of it? How can you take advantage of it? Anybody? You know how you can take advantage of it? Talk to me. How can you take full advantage of this? Nobody have no idea. How can you take advantage of it?
I was gonna say you can look at multiple time frames on this, but where it is right now, even just looking at it, you can look at strat setups, but also make sure you're paying attention to your gaps and also support and resistance, because right now it looks like it's on its way down, and you got some gaps to fill on the way down as well. You also got a huge gap up top too, so it's consolidating a little bit. But I want to look at a lower time frame and just see. And I would look for some actionable signals.
There you go. I like that. So now looking at this, right? This is the 9-hour time frame, right? We found some form of what? Support. Y'all see it? And then up on, we got some form of what? Resistance. So pretty much we're trading inside of a what?
A range.
Range. Now, if you guys follow technical analysis to a T, right? You don't need the strat candlesticks on to be able to tell you what's going on. Now, if we do pop above the 1 a.m. candle of 373 to the upside or 363 to the downside, guess what? We could trade this Monday to the upside or to the what? See it? We're trading inside of a what? Range. So we're waiting on this ticker to jump outside of a what? A range. Once we break outside the range, we understand we already got our levels going back to the what? Pay attention to the what? Upside. You see that? And then we can cover that gap. See how that works? Simplicity. Now, if we break to the downside, y'all ready for this? Weekly time frame, we got all of our targets coming back what? Change the color. Coming down. Y'all see this? It's there in front of us, ladies and gentlemen. All we have to do is take what? Got it?
Yep.
Simplicity, right? So all we have to do is just be what?
Be patient.
If you don't have any patience, ladies and gentlemen, you guys is going to be in a whole heap of what? Trouble. Got it? A whole heap of trouble. This is why I say you want to rinse and what? Repeat. Rinse and repeat. Rinse and repeat. Because if you get to the point that you rinse and repeat, like I understand people want to throw the numbers on it and all that. That's cool. I get it. I understand that, right? But my whole thing is we want to get back to candlestick reading, right? You want to be able to identify these candles without the numbers, right? You want to be able to identify what candle it is. Are we trading inside of a mother bar? Do we have any actionable signal? Right? Quality companies is always going to stand the test of time, right? So as I told you guys, and a lot of people were just shining me and saying crazy stuff to me, but it's okay. But I want to show you guys what did I mean by this. He was like, oh my God, Microsoft did this. Okay. If you look at Microsoft on a quarterly time frame, right? Microsoft on a quarterly time frame, right? We got a major rejection, right? At 551, right? So we pretty much call this a double top. So we pretty much created a 3. So you see this? This is a 3. People wouldn't even know that's a 3 unless they had the 3 on the calendar, right? Because we took out the high, we took out the low, and we flushed to the what? Downside. If you guys pay close attention to what's going on, if Microsoft breaks 342.13, Microsoft is going to have a hell of a flush all the way back down to support. Now, this is what I told people. If Bill Gates sold his whole stake in Microsoft, what do that mean for the company? Anybody? What do you guys think that means?
Oh, that's gonna look bad.
That's bad, right?
Yeah, that's gonna look bad.
Yeah. All right. So if that looks bad, what does that mean for the company?
It's gonna go more to the downside.
Yeah. And what happened? So this is what they did. We had extreme push in the what? and tech, right? Here we go. Weekly time frame. We had a stream push in what? Tech. We bounced. We went all the way up, right? And then what happened from there? We lost it, right? 668 all the way down to what? 349. So that pretty much is a 100-point move. Make sense? Behind the scene, they was pretty much propping it up. We understand that Microsoft is a powerful company, but my antennas went up when I say, hey, Bill Gates sold his whole stake in Microsoft. My antennas went up, right? Because why would you sell your whole stake in Microsoft when you started the company, you believe in the company? What is going on? Do you feel like it's a catastrophic drop coming? What is it? This is why I have to start thinking, right? And once you start thinking, you get an opportunity to make what? Money. Now, here we go. They give you days like Friday, right? So let's talk about this. So 90-minute orb, 9-hour orb. Y'all ready? This is why we can take full advantage of making money, right? So I get this question, how can you make money? Here we go. This 9-hour orb is 1 a.m. We mark the what? What do we do? Mark the high and we mark the what? The low. Y'all follow me? 15-minute time frame. What do we have, ladies and gentlemen? We have what? What do we have? Talk to me. We got execution. We got in this trade at 357. Y'all see this? 357. And then from there, look at this. At 9:45 in the morning, we completely went what? Parabolic. 24-point move. Y'all think y'all can make that happen for yourselves? Yes or no? Y'all think that y'all can utilize that system? Now, people say, oh, I would have missed that. Okay, I'm going to give you a 15-minute orb. Here we go. 9 o'clock. 9:15 is here. We're going to mark it. We're going to make it yellow. So, I don't want nobody to miss it. 2-minute time frame. You don't think that you could have traded this? 358, and we never came what? Back. Do y'all think that was a flawless trade, yes or no?
Yeah, it's nice.
1,000% trade plus in one day. Pretty much 3,000% trade if you took the 370s. Make sense?
Yep.
Simple way of trading the market, right? But they're going to give you these pops and drop. But if you look at it like on a weekly, 3-week time frame, Microsoft is not looking too what? Too good. But we've been here before. We bounced off of what? Support April of last year, right? And then went up and hit this double top and we came down. So we pretty much want to see what happens as we move forward, right? We don't want to be like hot potato, jump in. But if you guys like the company, this is your opportunity. What? Dollar cost average. We're down pretty much almost 200 from all-time highs. Is losing market cap. Market cap is 277. So we're pretty much lost over $1 trillion in market cap plus. Those are the things that I look forward to. All right, so Google, 15-minute orb. It doesn't really even matter. Just looking at Google this morning. All right, so Friday, Google 15-minute orb. Y'all ready? This is 9:15 counter. Y'all got it? We marked the low. 2-minute time frame. Remember, ladies and gentlemen, we're making money, right? In the market. We completely came out from the bell. 39, we took this trade all the way down to 34. That's a 5-point drop. Once we came back above the low of the 915, this is the high of the 915, we could have took the trade back to the what? Upside. 5-point move both ways, and this is what you call scalping, right? So when you see somebody say they're scalping, this is a really beautiful form of what? Scalp. And then what happened again towards the end of the day, ladies and gentlemen? We had another opportunity. We had a sell-off. We can put this on a 1-minute time frame. Let's do the 10 seconds. All right. What happened towards the end of the day? We came back below our what? Boom. And we pushed to the downside. So they was giving us opportunities to be able to trade. It's up to you if you really want to execute. Execution is key. All right. So flawless victories is there, ladies and gentlemen. All you have to do is what? Seek and destroy. All right. So I got Oracle on my mind, right? Just pretty much looking at Oracle on a quarterly time frame. Oracle is got battered. All right, so just looking at Oracle for what it is, we reject 343. We had an opportunity. We went 2 down. So pretty much just looking at Oracle. If Oracle continued to trend, we all the way back down to 115. We did hit 134.57. Oracle does have a shooter on a quarterly. On a monthly time frame, Oracle is coming down. We got a bearish 3. Can anybody explain to me what is a bearish 3? How can you distinguish a bearish 3 from a bullish 3? What is a bearish 3? Talk to me if you guys are trading this strat. What is a bearish strip?
It took out the candle took out the top of the
Yep.
previous candle, and then pretty much worked its way back through the range.
Right down to the
To
low.
the opposite side.
So what we're looking for on Oracle, ladies and gentlemen, since we created that major bearish street, that means we went up there, touched 249, and then we went all the way down below what? 166. So guarantee you, ladies and gentlemen, if Oracle come down here and break below the 52-week low of 134, we head all the way down to 115. This gives you an opportunity to buy more shares, dollar cost average, to be able to hold this ticker. I would tell you guys 60 months, 72 months. You guys want to hold it 5 to 7 years, sometimes 10 years, or sometimes a lifetime holding if it pays you a great dividend, right? This is your opportunity. This is your opportunity, ladies and gentlemen. So don't miss it. You guys can clearly see that on a monthly time frame, we're heading down, 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 right? And my whole thing, if you look on a weekly time frame, is heading down. We got a nasty rejection. We came below 210, and we completely flushed $50 from there. So the opportunities is there. Is do you want to take full advantage of those opportunities in a moment, right? Now, in order to look at the market, to try to be a savant, a lot of people like, oh, you know, I'm doing this, I'm doing that. That's cool, right? So looking at the market on Friday, it was pretty much 50-50. It was pretty much consolidation. We was pushing up, we was pushing down. We had an opportunity to be able to crash the boards, right? If you guys know anything about the market, you guys understand it's always a battle, right? You want to see the front half of the market. Where's the money going in? Is it calls? Is it puts? So you guys can see the front half of the market. They was put into calls, and then they started putting a little bit puts, calls. It was just back and forth action. Now, in order for you to be successful, right? So what I'm going to do is I always want to see what the whales are buying, right? If the whales are buying majority of puts, I understand I want to look at puts. If they're buying calls, I want to look at calls, but it still have to match with my setup. So just looking to see what the whales was buying. They came in the morning, they started buying what? Puts. They started buying, they switching to calls when the market opened. So SPY, they was pretty much heavy. They made their percentage. So on 1.4 million on SPYs, they made 12% return. Do you guys think that's a bad return? Yes or no? You guys think that's a bad return? 10% on a million? All right. They put in another order, 1.2 million. They made 10.6%. They put another order, 1.4 million. They made 12%. So they was in a position to be able to be successful by being able to actually play the market. All right. Now, one thing I did notice, I'm going to isolate this contract. Let's go down. I'm going to isolate. Let's get it. All right. 702. Isolate. So I isolated the contract, right? You can clearly see how they felt. They came in the morning, put 1.14 million, 701. So they did a block order all at once. They paid 2,500 per contract, which is okay. They pretty much say, you know what, I want to make money. They did 401 contract. The delta was 89. They made 12%, and they exit that position immediately, right? While a lot of people, traders, want to hold on to these trades, no, you're not looking to hold on to these trades. You're looking to be profitable, right? Holding on to the trade sometimes can actually be detrimental to your health and also your what? Portfolio, right? So you want to be able to take the profit off the table immediately if you can and keep it moving. I understand that you're paying with a $500 account. That's okay. If you make 12% off your $500, you make over $50. That's okay. If you repeat that 10 times, you make $500. You do it 20 times, you make $1,000. You do it 40 times, you make $2,000. So it's all about just compounding. Yes, you're going to take losses, and then you want to be able to try to recoup it. You try to recoup it in smaller form. Now, another trade idea that we did Friday. So I gave you guys 280 on Apple. So I think a lot of people fail to realize this. Just trade the market. If I give a trade out, ladies and gentlemen, trust me, I did my due diligence. If you guys remember, I told you we were trading inside of this range, right? So 280.58 was my target, right? But it took a while to get there. A lot of people are like, oh, I don't like it. So 8:30, this is Friday, 278.34. That was our opportunity to get in. We went all the way from there. We moved $7. So these contracts pretty much moved 800%. Pretty simple, right? We traded inside of a range. When we trade inside of a range, ladies and gentlemen, I like how the range looks, right? I want to be able to measure this range. I understand within this range is 73 to 80. So a 7-point move, and we got the whole move. We bounced, we pushed up. Now, people say, how can I scalp it? That's pretty simple. Looking at this, we trading this out of range. You have multiple opportunities on Friday. 915 high, 276.06. Back to resistance, 278. Boom. We went all the way to here to 280. We reject. We came all the way back down. Once we went back above 915 again, we understand we got multiple targets coming up, and then boom, bag drop. Simple. You guys think you could have traded that? Yes or no? Simplicity. It's just a simple way of trading, right? If you have the capital and the confidence and the skill set. All right. Any questions on that Apple play? All right. Coca-Cola. All right. Coca-Cola is another one, ladies and gentlemen. So just looking at Coke for what it is, this is 1 a.m. Thursday, 1 p.m. 8063, 15-minute time frame, ladies and gentlemen. This is what I want you guys to see. I think a lot of people get overwhelmed. This is Thursday. We broke this on Thursday. We hit resistance. We came above here, right, at 11. We came above here at 9:45. And then, boom, once we came out, we completely smoked it. It's all about just being able to understand what's in front of you and taking it, right? Boom. We got an entry, 8063, 82, $81 contracts. Boom. 0 DTs on Friday, and we actually what? Accelerated. Now, after the fact, we're going to say, oh, no. In real time, these trades are given out. There's no ifs, ands, or buts about it, right? So what question you guys have for me? Let's talk about it. I open for a couple of minutes. What question you guys have? All right, I'm here for a couple of minutes for you guys, and then I'm going to head off. And I'll see you guys Monday.
I had a quick question, Coach, and go back to the very beginning. Go back to when you took the Lily trade. I didn't end up seeing that until after market, but I took a look at it just to try to see what you saw when you was getting in. And I know you went over it, but the thing I want to touch on is just when it comes to trades that have a little bit like a wider spread on them. Like, what's your philosophy in that? Because I know that one, when I looked at the kind of like the sheet that you put together, it seemed like there was a little bit of wider spread, even though it was a cheaper contract. And I know, well, let me ask this. Are you more confident and comfortable taking that trade with that company with a wider spread because of the fact that it is a larger company? And if the trade goes in your favor, then those spreads will shrink.
Yeah, that's one part of it, right? Now, when I'm looking at the wider spread, is what I'm willing to give up for the contract. So in this instance, right, let me go pull the contract up, right? Because I can literally tell you what it said. All right, so we got Lily. All right, so the bid was 10, the ask was 39, right? So I gave him $28.
Okay.
Got it?
Yep.
Now, the last trading price was 19, right? You see it? So you really want to try to get it at the last trading price, but I'm looking at the previous close. I'm like, I'll give them $28. I'll do 10 contracts, right? Which is okay, right? Because those contracts went from 28 to what? 1,000. So sometimes you got to give a little to make a what?
Make a lot.
Make a lot. And that's
what I'm saying. Also, probably because of the company, right? Like, because I know if it's a more of a like smaller cap company, you might have a little bit more trouble. And also just paying attention to the volume and the open interest as well. Because if you take something that has a wider spread and doesn't have a whole lot of open interest, then you may be up a creek as far as trying to get out of it.
Yeah, you playing with fire, right? Because you can't exit.
Right. But with a company like Lily, you don't have to worry about that as much, especially if it goes in your favor.
Yeah.
Got you.
Right. And then one thing I try to explain to people is if things have a gigantic move like Lily, right? And have a monster move, and us having a monster moves put us in position because we moved 80 points.
Yeah, ATL.
So now that puts you into position to be successful. Got it?
Got it.
All right. So that was pretty simple. Just looking at it, and then we had the monster move to the upside. And it worked out in our favor. 9 times out of 10, we can get some solid trades, but sometimes it does goes against us. But if you took 2 contracts or 1 contract at $28, what's the worst you can lose?
Right. Yeah, you just lose your $28.
Right. You just lose lunch money.
Yeah.
But if it goes in your direction. All right. So I want to spell this out for everybody that's on the live because I was asked this question yesterday. All right. So please, ladies and gentlemen, if you guys are inside the call out group, I want you guys to pay close attention to what I'm going to tell you guys. Let's get it. Every morning plays come out at what? 9:15, right? Sometime 9:18, depends on how the day is going. Or I might say, hey, we're trading the orb this morning. No need for trades. We'll trade live, right? We'll trade the Max 7. We'll trade quality companies. Now, throughout the day, I got automatic updates that goes inside the group. It'll give you the 9:15 orb. What this is giving you is mapping out the first 15 minutes of pre-market trade ideas. It's giving you the highs. It's giving you the lows. This is a blueprint if you want to actually go in to be able to chart for yourself to see if you like any of these plays, right? But the plays that's set in stone is the plays that I put out on what? Flyers. Y'all follow me? Plays that's on the flyers, this is 100% what I believe in. I'm giving you the entries. I'm giving you the exit. I'm giving you the percentage. Now, next thing, throughout the day, it give you 90-minute orb setup. So it'll give you 10 o'clock, 11:30, 1 o'clock, 2:30, right? And 4 o'clock is going to give you setup highs and lows of the orb for those companies. It gives you another blueprint if you want to be able to take full advantage of these ranges. Got it? Now, next thing, midday from 12:45 to 1 p.m. is going to give you a midday surge in volume. It's going to let me know what companies have over $100,000 in volume, over 10,000 in open interest, right? So I'm looking at these companies to be able to gauge what direction we're going to move in for the rest of the what? The day leading to what? The next day. Now, 3 p.m. power hour, the same thing. It's giving me major flow alerts. High momentum setup is going to let me know the volume is over 100,000, open interest over 10,000. Now, these trade alerts, full flyers, and I do pin the trade. So there's no excuse if you're following the trade ideas. If you have multiple groups, of course, you're going to be spinning because everybody do things a little bit differently, right? But I tried to put out the flyers so you guys can actually have time to be able to look at the flyers, be able to execute. But if I taught you guys the orb, if I taught you guys how to trade the scout strat, I taught you guys how to use ICT, taught you guys support and resistance, you guys should be able to look at the flyer, look at the trade, see if it fits your profile, see if you want to trade it, right? You just got to stay locked in, stay disciplined, and let's get this money, right? Monday through Friday, these trades go out all day, every day. It's real play, it's real time, and we do live trade Monday, Wednesday, and Friday, so you guys can always ask questions, so you guys can actually feel a little bit more comfortable within this trade. All right, so you guys have 2 minutes, and after that, we're done. So this is the layout, ladies and gentlemen, for the call-out group. Please take full advantage of this. Please, ladies and gentlemen, do not sit on the sideline. If you guys like something long-term is not a quality entry point, please take full advantage of it, okay? Full advantage, right? So that was some great questions this morning. If you guys don't have anything to say, we'll be leaving off here pretty soon. All right, that's good.
Coach, I got one question. I read something on Yahoo this morning, and they were talking about the pretty much like the Mag 7 and a lot of larger caps like pulling the market down this month.
It is.
And a lot of the lower caps actually shining, but because of the larger caps pulling the market down, it's kind of going like unknown. What's your perspective on that? Like kind of just keeping that in mind as a trader, like what's your perspective on that? And like trying to kind of like planning for trades. Of course, you go in, we can do our due diligence, look at, technical analysis and stuff, but just knowing that overall, like what does that signal to you as a trader other than just kind of like paying attention, maybe to some of the smaller cap companies as well?
So just looking at smaller caps, so things like Crocs and stuff like that, being able to dissect it. So I try to tell people, one main thing that you can do is look at IWM Holdings. So let's go. Russell 2000, right? So you want to see, hey, what company is performing pretty well? So they have 18% tech, 17% industrial, 17% healthcare, 16% financials, and then the rest spread up materials, utilities, and things like that, right? So your main thing is you want to see what's performing pretty well on the side of the smart cap. We know BE has been performing pretty good. CRDO, that's on my list, is doing pretty good. IONQ, right? So you're looking and you start realizing that these small caps can actually move, right? But at what point do you start realizing and come to realization is if the small cap is moving and a major cap is dumping, eventually it's going to affect smaller cap and the whole market is going to start what? Falling. Now inside here they do have cash on hand as well, so which is a pretty good thing. But you can pretty much you see HUT form, right? So let's go to HUT and BE. All right. So what I did do on the chart, this is IWM and this blue line right here. I'm gonna change the color. I'm gonna change it, let's say to yellow. This is SPY. So you can clearly see that IWM is going up and SPY is coming what? Down. So I'm gonna add QQQ on there. QQQ is green. So you see how IWM peaked with QQQ, came down. QQQ and IWM is coming down, and QQQ is still going what?
IWM still going up. Yep.
IWM still going up. All right. So I'm gonna add DIA. Hey, I'm gonna add DIA to the thing as well. All right. So here we go. All right. So we got DIA is added. We got QQQ and SPY. You see all three right now. You notice anything about DIA? Let's change the color of DIA to red, pink, whatever. All right. DIA is keeping track with who?
IWM.
All right. So that means a lot of blue chip companies still what? Performing pretty what? Pretty well.
Doing well. Yep.
So tech is selling off. SPY is selling off as well. We got a lot of tech in there now. And we go back, like I said, BECRDO, right? So let's see. All right. This is the Dow Jones, right? This is the list. Apple performed pretty well. Coke performed pretty well. HD performed pretty well. Johnson & Johnson, McDonald's, Pfizer, T Travels, United Health performed pretty well. Verizon and Visa. All right. So BE is one of IWM top, right? But what happened Friday?
Dumping.
But if you put it on a monthly time frame, BE has been going completely what? Parabolic. So we pretty much went from BE, all right, you see here, 2000 in December. We went from a 111 all the way to what? You see that? Yeah. Major to the upside. So just being able to understand what BE is doing, right? And you go back, you say, okay, if BE start falling, that means IWM will start falling, CRDO, right? Because these is the largest holders by percentage. What happened? CRDO dropped Friday, right? But if you look at the monthly time frame, it's been running for what? A while now. But if these tickers start dropping, what's going to happen to what? IWM.
Yeah, it's going to start dropping too.
Now, the reason why BE CRDO holds weight because it's 1.93% weight, right? And CRDO is 1.2%, right? So STRL. So STRL, right? It dropped $70. So if these three tickers is starting to drop, what's going to happen to IWM?
Yeah, it's going to come down.
All right, so IWM won't be the golden child, and IWM just hit all-time what? High. So once IWM start conforming and it start catching up with QQQ, start catching up with SPY, and DIA start following, guess what start to happen? Right? Because DIA also hit an all-time what? High. Right? Because Dow Jones crossed over what? $53,000 for the first time. Y'all see what's going on in the market?
Yeah.
All right. So this is why we have to pay close attention to what's going on, right? Everything is not going to always run in tandem, but everything will give you an opportunity. You're not going to always be 100% right. But we did cost 53,000 and 97, and then we got a rejection from there. So that's what we're looking at. So that was an awesome question. Like I said, once again, QQQ is falling, SPY is falling, DIA is keeping track with IWM, but eventually once IWM start falling and Dow Jones start falling, it's going to get on track with SPY and QQQ, and then everything ES and NASDAQ, and everything start coming to the what? To the Dow. So those are the things that you want to pay close attention to. IWM is a stellar ETF, small cap, but we want to pay close attention to that. All right. So y'all try to enjoy the rest of y'all Saturday. I'm out.
I appreciate it, Coach.
No problem. Peace.